Hi, I'm Laura Hay, Sector Leader for Insurance here at our National Insurance Conference, our 27th. We have about 300 insurance professionals here joining us to talk about the theme of driving momentum through transformation in the insurance industry. We've had three terrific keynote speakers: Nassim Taleb, the author of The Black Swan; Con Tran, President of Pacific Life, to talk to us about innovation; and Matt Winner from Allstate.
I moderated the session with Nassim Taleb, which, as people know, is one of the most foremost thinkers on risk-taking, complexity theory, and how the insurance industry can operate going forward. The insurance industry for years has been able to take its excess returns and use finance to subsidize the underwriting business. And now with the state of complexity in global financial markets, that's no longer going to be possible. So we had a really in-depth conversation around what some of those solutions are.
CEOs are demanding growth without headcount addition. They want economies of scale in their business, and probably the most effective and rapid way to achieve that is through robotics. Robots have arrived in the insurance industry. The manufacturers are here already. They're piloting their solutions in insurance, and the opportunities in front of us to take advantage of those technologies.
So we introduced a whole host of ideas today, and the decision at the end of the day becomes, do you adopt them to become a leader in your space, or do you become obsolete like a dinosaur?
We are alive at an extraordinary time when the industry is unquestionably subject to transformation, primarily as a function of digital technology. That technology is going to reduce losses, reduce premiums, increase some of the risks, reduce costs significantly, as well as cause some consolidation. And companies can do themselves a big favor by doing the fact-based analysis to understand how these technologies are going to impact their company and responding proactively with strategies that take these extraordinary events into account.
I think the key messages we're trying to get across from a cyber perspective today is really leadership and tone at the top. Controlling cyber risk within the organization requires a senior executive that's responsible and charged with cyber across a multidisciplinary team that does not include just security. I think the second most important thing that organizations can do is really understand the critical data that they have in their environments, the protections that need to be in place to safeguard that information, and how they monitor the effectiveness of those safeguards on a day-to-day basis.
Our message was that self-driving cars are already on the road in prototype form, and certain forms of technology are already commercializable. So it's not about something that's going to happen, it's about something that's already happened.
The impact on insurance is something then that we're really paying a lot of attention to, and really our view at the end of the day is that frequency is going to go down in terms of accidents. And what that's going to happen, what that's going to cause then is fewer accidents, and there's going to be lower losses, and premium's going to follow the lower losses. And not only is that you're going to have a shrinking premium pie because of that, but the slices are going to be different, meaning that now we've got a lot of personal lines and commercial lines. In the future, we think the personal lines component of that pie is going to get smaller. Commercial lines is going to take over more because you have fleets on demand. And then also product liability is going to be in there at that point as well.
What does that mean? That means that you've got to put some scenarios in place, start looking at your cost structure, looking at your exposure, looking at your culture, start educating your people around the change. And once you start to do some of those things, I think that you're starting to get on the road.
The key message here for insurers and insurance regulators is to be on top, be proactive, and understand what regulators are talking and thinking about, especially in the international and the national space, and how those requirements are going to interact with each other. As far as the level of preparedness for insurers, there is a wide variety of different levels, and some of that has to do because of the global insurers are required to be on top of this now because of federal regulation and state regulation. The local insurers maybe not so much so, but all should be very mindful that whatever happens on a bigger scale, a global scale, is likely to be pushed down onto your domestic insurers, and they also need to be proactive as opposed to reactive.
The NEIC has been very active and had a lot of activity going on. They continue to focus on captives and special purpose vehicles.
Internal control is a hot topic right now. We have COSO 2013 that came out that many companies adopted in 2014. Others are adopting here in 2015. We're seeing through the SEC comment letter process, they're very focused on internal control, and even in the PCAOB finding report. So it's a very topical thing for all of us to be thinking about and focused on, and certainly going into here into year-end reporting, very timely.
Change is a big part of what's going on today in the insurance industry, and the accounting and financial reporting changes are just one of those changes. A lot of the focus today needs to be on planning. Some of the standards are issued, some of them are still coming. So what are you doing to be ready?
I think the timing is right. There is now a reason for action. Some of these things are actually coming to fruition now after a lot of years of dialogue and debate by the standard setters. Companies need to start to take action, start to prepare resources, potentially IT systems and controls. So it is time to consider taking action and starting that process.
Disruption is here, and we need to face into it as an industry and taking advantage of the opportunities as opposed to seeing it as a threat for the future long-term growth of the industry.